I will ask 3 simple questions to test your knowledge on price action. Number 1. This is a resistance trend line. Price has closed above the trend line. Now guess whether it is a real breakout or false breakout. You have 5 seconds of time. Well, this is a genuine breakout, right? Number 2. This is also a resistance trend line. Price also closed above the trend line. Now guess whether it is a real breakout or false breakout. You have 5 seconds of time. Well, this is also a breakout, right? But notice one thing, it did give a pullback, tested the breakout level and then rallied on the upside, right? Now, third chart. Once again, there is a resistance trend line. Price closed above the trend line. Guess it is a real breakout or false breakout. You have 5 seconds of time. Once again, it is a real breakout, right? Interestingly, once again, the price tested the breakout level before moving in the upside direction, right? This is an interesting quote from the world's famous martial artist Bruce Lee. I fear not the man who has practiced 10,000 kicks once, but I fear the man who has practiced one kick 10,000 times. In trading, this quote emphasizes the importance of mastering a single trading strategy through consistent practice and refinement. In this video, I will be sharing a trading strategy that can be used in scalping, intraday trading and swing trading. Breakout trading can be again divided into 2 types, strong breakouts and pullback breakouts. Strong breakouts are like Virender Sehwag, from ball 1 starts hitting. It means after the breakout, they rally upside without giving any pullback opportunity. Whereas pullback breakouts are like Rohit Sharma. Rohit takes some time in the beginning to settle down and score more runs later, right? It means after the breakout, price tests the breakout level and then rally big time on the upside. In this video, we will learn how to spot pullback trade opportunities, how to take an entry, where to place the stop loss, and how to fix the target. So without wasting much time, let's start. Pullback trading consists of many important components. Number 1 is drawing proper resistance trend line. Number 2, identification of strong breakout point. That is very important. And number 3, wait for the proper entry point. Just after the breakout, we should not take the entry. So we need to wait for the proper entry point. And number 4 is trade management after taking the trade. So I will explain one by one. First one is drawing a proper resistance trend line. Again, I have seen many people, they draw trend lines, in any manner, but we should follow certain guidelines while drawing a proper resistance trend line. So these are all some of the important points. So we need to connect more number of picks as much as possible. And number 2 is the break of the powerful trend line will only give the good moves, because if the price breaks a small trend line, it will not give a very big move on the upside. If it breaks a very powerful trend line, then it will give a very, very good move on the upside. So number 3 is consolidation just before the breakout is really good. So I'll explain again these independent factors in detail. So now observe this resistance trend line. It connect 3 peaks, right? 1, 2, 3. So it connect 3 peaks. So we can consider it as a decent trend line because it connects 3 peaks just before the breakout. Now, if you look at this trend line, so it connects 5 to 6 peaks, right? 1, 2, 3, 4, 5, 6 peaks. In this case, breakout didn't happen. That's a different story. But it connects close to 5 to 6 peaks. Hence, it is a very, very powerful breakout actually. If the price breaks this resistance trend line on the upside, it would have given a very, very big move on the upside. So now if you look at this particular chart, it connect only 2 peaks. I have seen many beginners, they make this mistake. So they connect only 1 or 2 peaks and they call it as a resistance trend line or a support trend line. See, if you want to take breakout trades or breakdown trades, you should try to draw a strong trend line, strong support trend line or a strong resistance trend line. So a trend line will become a powerful trend line whenever you connect a more number of peaks. See, when you connect only 2 peaks, it will not be a powerful trend line. This is a weak trend line. So always try to connect more number of peaks as much as possible if your intention is to take only breakout trades. Okay, so now we know the number of peaks parameter, right? So you should try to connect more number of peaks. So this is clear. Now the break of powerful trend line will only give very good big move actually. So if you look at this particular trend line, so this is a powerful trend line, right? Because it connects 1 2 3 4 approximate 5 peaks. So this is a powerful trend line. See, now this is a very clear breakout, right? And hence price gave very big move on the upside. So this is very important. We should have a powerful trend line. Price should break the trend line very clearly with a powerful move. Then there is a high possibility of getting a big move on the upside. Now there is one more example. Once again, this is a powerful resistance trend line, right? Because it connects 1 2 3 4 5 6 7 peaks actually. So this is a powerful trend line, and the breakout is also very clear, right? There is a clear cut of breakout, and hence it gave a very big move on the upside. So if you look at this particular chart, it connect only 2 peaks, right? See, this is not a powerful trend line. This is a weak trend line. It appears like a decent breakout because the breakout candle is big, but you should remember it is not a powerful trend line, right? Breakout is not coming from a powerful trend line. So there is a high possibility of price, not going on the upside, or even if it goes upside, it will take more time actually. So that is why you should always try to locate a powerful trend line and the breakout of powerful trend line. See, in this case, it didn't give a very good move on the upside, right? In fact, it moved downside actually. So I hope this is clear, right? The break of powerful trend line gives very good moves on the upside. Now, this is where consolidation, the third parameter is consolidation just before the breakout is good. Once again, many beginners and even intermediate level traders ignore this parameter. So this is also very, very important. See this is a powerful trend line, right? It connects close to 4 to 5 peaks. So this is a powerful trend line. Now the breakout is also very clear. Okay. But if you notice very carefully, there is a consolidation of 7 to 8 days, right? So what this consolidation indicates is, let's say this is also called a short buildup actually. Okay, so let's say people are people are coming and people are trading this particular stock, right? People will always take trades. So whenever price comes to this level, so the people who took advantage earlier at this level, so they think that price once again will go down, and hence they try to take short trades actually. Okay, so when the price spends 7 to 8 days here, what it indicates is short buildup, which means people are taking short trades. They are taking short trades, but the issue is price is not going down. Okay, so people who took the short trades, where they will keep the stop loss, they will keep the stop loss above the resistance trend line, right? This is the main logic. So if the price don't go downside, and if price comes to this level, so what happens is their stop loss starts hitting, right? So indirectly they will convert as buyers, right? They will become buyers at this point of time. Whenever the price breaks above this level, they become buyers. Because of their buying pressure itself, it gives a very big move on the upside actually. So this is where this consolidation before the breakout is very, very important. If it consolidates more number of time, means there is a high possibility of very big move. So this is where we need to remember this. This is very, very important, friends. See, now this consolidation is very important. This is one simple example. After the consolidation, price moves on the upside. If you look at one more example, so this is also a powerful resistance trend line. It connects close to 5-6 peaks, And if you look at the breakout also is very, very decent. It is a very decent breakout. And look at consolidation. It consolidated there around 1, 2, 3, 4, 5, close to 10 to 12 days. It consolidated there. So what happened was price came near resistance trend line, and these short traders, they think that once again the price will go downside. This starts accumulating their short position every day. Okay, and once the price broke the resistance trend line, then automatically they converted as buyers. With a normal buying, their buying power also added, and hence price moved on the upside. So this is where consolidation also plays a very, very crucial role. I hope you got clarity on consolidation before the breakout point as well. See, number one point I have covered, drawing a proper resistance trend line. It covers three important aspects. We should try to connect more number of picks, because the break of that particular powerful trend line will only give very big move on the upside. And number three is consolidation before the breakout is good. So now I have covered drawing a proper resistance trend line topic. Now the next point is identification of strong breakouts. This is also very important, because I have noticed many traders, they fail to identify the strong breakouts. See, for example, a break of resistance trend line. For example, let's say there is a resistance trend line. The break of resistance trend line can result in a good breakout, which means very good move on the upside, or mediocre breakout, which means it can go only medium upside move, and false breakout. It can also give a false breakout and it can go down as well. There is also a possibility of going down. So you should be able to differentiate good breakout, mediocre breakout, and false breakout, right? See, for example, this is an identification of strong breakouts. So this is a magnified version of the breakout candle. I have zoomed in a little bit. If you observe this, the breakout candle looks very powerful and the price went upside, right? This is an example of a good breakout actually. Now, if you observe this particular chart, there is a resistance trend line. It connects around 5 peaks. This is quite a powerful resistance trend line. But if you observe the price action very, very carefully near this, okay. So observe this very carefully. If you observe here, not there. So after the breakout point, I will clear this. So if you observe the price action after the breakout of resistance, it broke with a small candles, right? So what small candle indicates is lack of buying power. If the buyers are really strong, or if the buying power is really strong, it would have been resulted in a big candles, right? So the lack of buying power after the resistance trend line resulting in small candle. So what small candle indicates is a lack of buying power or buying intention even after the price breaking the resistance trend line. So what this indicates is there is a high possibility of price giving a mediocre breakouts on the upside. Why? Because the resistance trend line is powerful. There is no doubt about this in this case. But the breakout happened. The price broke above the resistance trend line with small candles. So what this indicates is buying intention is, it's almost nothing. Okay, it's very small doji candles are there. So this indicates buying intention is nothing. So there is a high possibility of giving a mediocre breakouts. So this is number 2. And number 3 is false breakout. See, in this case, the trend line is okay. It connected only 2 peaks. It is a weak trend line. So this is a false breakout. So false breakout happens whenever there is a big selling wick on the breakout candle. See, this is, in this case, it is a false breakout, right? See, to get success in pullback trading, you need to get rid of mediocre breakout and false breakout, right? You should try to locate or identify or trade only good breakouts. So how do we do this? So that is very, very simple. You should follow simple one rule. There is one simple rule. If you try to follow that one rule, automatically you will end up taking more number of good breakout trades. So the logic is very simple. Let's say there is a resistance trend line. Price break the resistance trend line with a big breakout candle. That is very important. And the selling wick is very less. Okay, on the breakout candle, the selling wick is very less. Let's say it's less than 20%. Then there is a high possibility of good breakout after that. Okay, that is good. That is the sign of good breakout. Bigger buying candle, bigger the breakout candle, and the selling wick on the breakout candle will be very small. That is the signs of good breakout. And if the price breaks the resistance trend line with a small candle, or if there is a big selling wick on the breakout candle, so that indicates the sign of false breakout. If the price breaks the resistance trend line with a big selling wick, so selling wick indicates the presence of selling, right? Sellers are very strong in that particular candle. So in this case, it is more than 60-70% of selling, right? So this is, whenever you get this at resistance trend line, there is a high possibility of a false breakout. And number 3 is, if the price breaks the resistance trend line with small candles, chota candles, which means there is a high possibility of mediocre breakouts. Okay, so this is very simple. If the price breaks with a big candle with a small selling wick, which means good breakout. Always remember this. If the price breaks the resistance line with a big selling wick, means there is a possibility of false breakout. If the price breaks the resistance trend line with small candle, means mediocre breakouts. So always remember this rule. So on the breakout candle, the selling wick should be less than 20%. This is very important. This is the sign of a good breakout. So now I have covered identification of strong breakouts as well. I hope these 2 points very clear: drawing proper resistance trend line and identification of strong breakouts. So now let's move on. Wait for the proper entry point. Let's say you spot this. Okay, you are taking trades. For some reason you spot this chart. So now what happens is, your mind starts thinking, wow, I have identified a very good breakout trade opportunity, and FOMO kicks in into your mind, right? Fear of missing an opportunity. You might think, what if the price goes upside from here? What if I don't get an entry point? Your mind starts thinking all these things, and it pushes your mind to take trade here only, right? It happens with many cases with many people. But in fact, in reality, you need to wait until the price comes back to the breakout level. So if it comes back to that level, that is a very good trade opportunity to take trades under pullback trading. See, after that, price moved or rallied on the upside. So waiting for the proper entry point is very crucial. So the logic is very simple, friends. Let's say there is a resistance trend line. Okay, so now price breaks on the upside. You should let it go. Okay, go. Price moves above the upside resistance trend line, above the resistance trend line, let it go. Then wait until price comes near the breakout point, breakout level, that is the resistance level, and forms a bullish confirmation. These bullish confirmation can come through bullish engulfing, or bullish harami, or hammer candlestick pattern, or pin bar pattern. So try to look at the bullish candlestick pattern. Bullish confirmation is very important. So in this case, let's say you got a bullish engulfing pattern. So your entry should come above the high of bullish engulfing. Okay, your entry should come above the high of the bullish engulfing, and your stop loss should be below the low of the bullish engulfing. Okay, if there is a bullish RMA, above the high of the bullish RMA is your entry point, below the low of the bullish RMA is your stop loss point. So entry should always come above the bullish candlestick confirmation. See, you should wait for the breakout of the resistance line, let it go, it's not a problem. Then price should come back to the breakout level or the resistance level. Then it should form a bullish candlestick confirmation. If the price comes to the resistance trend line, if it doesn't show bullish confirmation, don't take the trade. Wait for the bullish confirmation. Once you get the bullish confirmation, take the long trade above the high of the bullish confirmation candle and keep your stop loss below the low of the bullish confirmation candle. Okay, then you should ride your profits. So this is how you can take the entry in the pullback trading style. See, This is one simple example, friends. This is an Hero Motocorp chart. See, the resistance trend line is a very powerful, right? Because it is a very powerful resistance trend line. It connected around 5 peaks. Now you can see consolidation, right? Consolidation also 4-5 days. It's consolidated before 4-5 days. It also consolidated for close to 7-8 days. Consolidation is there. Then the breakout is also there. Very clear cut breakout, right? But your entry should come back once the price goes up and comes back to the tested level, the breakout level. That's where you can spot your entry. In the first candle, first instance, you can see it is kind of bullish harami pattern, or one candle is a hammer pattern. So you can take the trade above that, or the second time also you got an opportunity. It is very similar to bullish engulfing, and you can take the long trade above the high of those candles, and your stop loss should be below the low of the bullish confirmation pattern. So this is one simple example of Hero Motocorp. So the second example is Maruti Suzuki. Once again, there is a clear cut of powerful trend line 1, 2, 3, 4. It connected around 4-5 peaks, and again, little consolidation just before the trend line, and we also have a clear cut breakout. The selling wick is it's less than 20%. Now price has gone up, and it came back, and it exactly the resistance line, right? It exactly took support at the resistance line. It formed a kind of bullish harami pattern, and then it moved upside, right? So this is a very simple example in Maruti Suzuki. So this is daily chart, friends. Now this is your entry point. The bullish harami is your entry point. So one more example is another Hero Motocorp. See, in this case, sometimes these kind of moves do happen. That's why I'm included this chart. Again, it's a Hero Motocorp chart. Let's say this is a powerful resistance trend line, right? But after the breakout, observe price didn't came back to the resistance level, right? It rallied on the upside immediately. Sometimes these kind of moves do happen. Friends, please remember, there is not a single trading system in the world which captures all the good trade opportunities. There is no way. You pick any trading style or trading system or trading pattern, definitely it will not be able to capture all the good trade opportunities. 100% no way. Okay, so you should always remember this. Sometimes whenever you follow pullback trading, these kind of moves do happen. You will get it, you will experience it. So you should overcome it. You should be able to digest these kind of experience in a powerful manner. You should not allow your emotions to trigger after experiencing these kind of things. Okay, so you should always remember things in pullback trading. Sometimes price breaks the resistance trend line and it rallies on the upside immediately. Okay, it happens. Experience it and digest it. Okay. Now I will take one more example. So this is USD JPY. See friends, this is a raw pullback trading concept. It works in all the time frames. It works in all the trading instruments as well. Again, this is a USD JPY. There is a powerful trend line. It connects 3 peaks. There was a clear cut breakout, and see price went a little bit upside. Once again it came back. It formed a bullish harami pattern, and then price went upside. So this is also a daily chart in USD JPY. It works in forex. It works in commodity. It's a raw trading concept. It works in all the trading instruments as well, in all the time frames as well. But whenever you get into a lower time frame, you should always remember one thing: there is a high probability of noise, because when you are in daily charts you will get some trades, but when you get into a lower time frame like 50 minutes or 10 minutes or 5 minutes, see the concept works same, but the noise increases. Okay, so there is a high possibility of getting, you definitely will get more number of trades, but again the noise also increases. So you should be able to absorb that noise, which means when I say absorb that noise, you should not trigger, you should not allow that experience to trigger your emotions, and you should follow proper risk management rules. That's very, very important, friends. Now, this is one more example. This is Broadcom INC. It's a stock in US markets. Once again, there is a powerful resistance trend line, and price broke the resistance trend line and came back. It formed a kind of bullish engulfing pattern, and then price rallied on the upside, right? So this is, it worked in US markets as well. It works in Indian market. It works in Australian markets. It works in all kind of markets actually. Okay, so now I have covered proper entry point as well. Now the most important point is trade management. See, many traders, they learn only till this much and they will ignore the trade management. Actually, the real result, good result, will come only because of the trade management. Because I have seen most traders, they know the entry point, they know how to write the stop loss, they know where to place the stop loss. People know all these things, but the next important thing is trade management. So managing your trade is very, very important. So we will cover this. See, a few points are very, very important. Let's say you've taken a trade. Okay, so after taking the trade, price went upside. Let's say your initial risk is 10 points, and let's say you have taken a trade at 100 rupees. 100 is your entry point, 90 is your stop loss. Okay, now from 100, price moved to 110, which means 1:1 move happened. Now don't keep your stop loss at 90 itself. Trial your stop loss to 100 and then hold the trade till the end of the day or till some level. Why? Because if the price comes back, or if it becomes a false breakout, or if it becomes a mediocre breakout, you don't lose any money, right? Because it will become a break-even trade. So if the price moves on the upside, means you will be able to capture the entire benefit, right? So after your entry point, if the price moves 1:1, then immediately trial your stop loss, your initial stop loss to the entry point, so that you don't make any loss on that particular trade, except excluding commissions and brokerages, right? Now, after taking a trade or before taking a trade also, always notice and observe where is the next major resistance on the same time frame. Let's say you are taking this pullback trades on a daily charts. Okay, now the resistance is price is breaking the resistance line, and now always notice and mark where is the next resistance trend line on the chart. Suppose if the price comes to that level, maybe 1:2, 1:3, 1:4, or 1:5 is required. If the price comes to that level, it is always better to exit the trade there. Suppose if you want to capture the entire trend, or if you are okay to take more risk, which means you can hold your trade, but I suggest for most people you can exit the trade there, or you can exit 50% or 75% of your position at a major resistance, and then you can hold the remaining portion, remaining maybe 25% or 50%, you can hold that particular position. But exiting at least some portion, 50% at a major resistance, is very, very crucial. Now, TSL below swing low. Let's say your plan is to ride or capture the entire trend. So what you can do is, when the price moves 1:1, you can trial your stop loss to the entry price. After that, let's say price made one more swing low and went upside. Then you can trial your stop loss below the low of the next swing low, and then you can hold your trade. You can start doing like this. For example, let's say this is your entry point. Okay, so this is your entry point and this is your stop loss, initial stop loss. Let's say after this price moved here, this is 1:1, assume this is 1:1, then you should move your initial stop loss to here, entry point. So this is what I was saying, this is entry point. If the price comes back and it hits your stop loss, means you don't lose anything, right? It will become a break-even trade. Now let's say price went upside, it makes a swing low and again it breaks a swing high. The breaking of this line is very important. So if this happens, then immediately shift your stop loss to here, the low of this. Okay, and once again price makes a swing low and goes upside, then once again shift this stop loss to here. So in this way you can keep shifting your stop loss and you can try to ride the entire profits. So this is one way, actually this is very, very important. So the last point is, if you are a positional trader, if you trade in equity, don't deploy more than 10% of your capital per trade. Let's say your total capital is 10 lakh rupees, then invest entirely only 1 lakh in one particular trade, because in most cases that particular stock will not become zero, right? Even if it comes back, it becomes zero. In worst scenario, even if it becomes zero, you will lose only 10% of your capital, because you would have deployed only 10% of your capital that particular trade, right? See, if you trade in futures, you need to look after a couple of things, because when you take trades in futures, especially positional trades, you need to look up. You should think of the gap down open risk. Actually, that risk is there, so you should mitigate that risk by hedging, buying put options, or doing something else. But you should always remember it. But if you take trade only in equity, means you should deploy only 10% of your capital per trade. Even in worst scenario, the stock comes and becomes zero, then also you lose only 10% of your capital. That happens very, very rarely, but you should remember this. So if you follow the fourth rule, so whenever you take a stop loss, you lose only 0.25 or 0.2 or 0.3 or maximum 0.5 or maximum 1% of your capital per trade. Especially I'm talking about the positional trades in equity. Okay, so this is all very, very important. Friends, so once you have a profitable trading strategy in place, remember these points to enhance your success in stock market trading. Number one, risk management. Always prioritize protecting your capital first. So always place your stop loss order to limit potential losses on each trade. Number two, consistency over perfection. Always aim for consistent gains over time rather than trying to make a huge money with each trade. So always stick to your trade plan and avoid making impulsive decisions based on emotions. Number three, continuous learning. So stay updated with market trends and important events. Always stay away from trading when a big event is pending. Number four, keep emotions in check. When you let your feelings guide your decisions, you might end up doing things without thinking carefully, which can lead to making mistakes and causes big losses. Next is diversification. Friends, don't invest all your savings in the stock market itself. Invest some money in gold, invest some portion in bonds, invest some portion even on FD, and only invest or trade only some portion of your savings in stock market. And next point is track performance. So keep a detailed records of your trades, including entry, exit points, reasons for the trade and outcome. So analyze your performance regularly, which means weekly or monthly or quarterly, to identify your strengths and weaknesses. Next is adaptability. See friends, markets are always dynamic and constantly evolving. Be prepared to adapt your trading strategy to changing market conditions and unexpected events. By including these points in your trading routine, you can enhance your chances of success in the stock market trading over a long term. Thanks for watching. Stay informed, stay disciplined, and happy trading, friends. See you in the next video.